So China has taken the pole position in the electric vehicle war. Now to some this is surprising, but we all knew it was just a matter of time. Now this video is meant to be a wake-up call to Tesla and US trade policy as a whole. The entire US auto industry is about to enter a dark age of protectionism. Trump has confirmed that US auto tariffs are coming for global car imports. It's not even April 2nd and it has now been imposed. Vehicles coming into the US would face a 25% import tax, which will drive prices up. Now, at a minimum, the cost of a new car will rise by $4,000, and EV prices could increase by up to $12,200. And without a doubt, this will put many of the price of cars out of range for many US households. While it's true that domestic car jobs will come back to the US, it introduces a fatal problem. Companies like GM and Ford won't have any incentive to put their best foot forward, and without competition, where's the need to innovate to build better models? Legacy companies are already in big trouble. Ford is projecting an earnings fall of $2 billion or more. They raked in over $10 billion a year since 2021, but the situation is turning dire thanks to the tariff war. In 2025, the company expects earnings to hit $7 billion in the worst case scenario. In February, sales in the United States alone fell by 8.9%, and this has nothing to do with Chinese competition. Remember, cars and EVs from China are facing a 120% tariff if they try to sell into the US. Vehicles from Beijing aren't causing a decline in total US auto sales. America is already a highly protected market. Passenger vehicle sales in the US actually fell by 4.4% year on year last month. This is an ominous sign of US consumers going broke and the US car market starting to contract. Now, at this point, the smarter thing to do is to throw open the market and allow free trade to take over, give US consumers a chance to buy cost effective cars, and force domestic factories to bring prices down. By imposing tariffs, you're doing the exact opposite. But the Trump White House is seeing things in just one dimension.
But think about this for a second. Why are American cars made in Canada? Why are they made in Canada? To the president, it just doesn't make sense. Why are American cars made in Canada? Those jobs should be in America. And that's what the president thinks, and that's what he says, and that's what he's going to execute.
Now, Lutnick wants auto jobs to relocate back to the United States, and he's willing to get the American consumer to essentially fund this big move home. However, by doing so, this risks the entire car industry stagnating because prices are going to fly much higher. In aggregate, total sales and profits could even drop. But China just gave US car makers a big wake-up call. BYD's revenue for 2024 has officially surpassed Tesla. Sales increased by 29% to hit $107 billion. Tesla, however, hardly grew, stuck at just $98 billion. As a result, investors are piling into BYD stock, and that is lifting the share price by nearly 50%. Tesla is still down by over 30%, and it's really a tale of two EV makers, one forged by open market competition and the other getting soft thanks to US protectionist policies. Since 2018, Tesla's revenues have always been higher than BYD, but 2 years ago, BYD sales have been growing consistently. This is despite being blocked from the world's biggest consumer market. And if the tariffs were dropped, we can expect BYD sales to hit the moon. They will grab Tesla's market share. And if we look at this from another angle, it shows that the company doesn't even need the US market to survive. The world is big enough to make up for it. And this is a story of US auto industry lagging behind on both a tech and pricing power basis. A great way to see the disparity is Tesla sales in China. Elon's company manufactures cars there as well. So there's zero difference in the ecosystem, but yet the company still can't compete. Tesla reported a steep 49% decline in their China sales last month. In January, their sales fell by over 11% as well. So this isn't an isolated incident. China's car market is the biggest in the world, so if Tesla was truly innovative, it would have reflected in the numbers. Just like in Jerry Maguire, you gotta show me the money. Everything else is just spin and narrative. This is the danger of resting on your laurels, plus you have Elon Musk distracted every single day trying to fire more federal workers. Now, doing a price comparison, we can immediately understand why Tesla is floundering in China. Now, taking just 5 models from BYD and comparing them to the Tesla equivalent, we can see who understands the Chinese market better. Now, BYD Dolphin, which is a budget sedan, retails for only $14,000. Tesla's Model 3 goes for $32,000, which is more than double the price. And when we compare the premium sedan, the same story plays out. The BYD Han comes in at $34,000. Tesla's Model S is more than 100 grand. This is what US consumers are missing out on. Imagine paying $100,000 with auto loans and over 7% interest on a car note. You essentially mortgage your future to pay for just one car. Thanks to a culture of hyper-innovation, Tesla will continue to be under pressure, especially in China. And because Beijing doesn't want a technology leak, Tesla is going to be behind the 8 ball for quite a bit. While the US is blocking Chinese EVs from coming in, Beijing doesn't do the same thing. Tesla is actively building cars in China, they are welcome there, and there's no national security issue on the Chinese side. Tesla is welcomed because they keep Chinese automakers on their toes. Foreign competition is the reason why BYD and other players like Li Auto and Great Wall Motors are innovating fast, and the consumer ultimately wins. Just a few days back, BYD just launched their Qin L, which is aimed to bury Tesla Model 3, and the price tag is already very tempting at less than $17,000. The Qin L might just be available in China, but you best believe the company will adapt it to sell into other markets, especially in Latin America and Southeast Asia, where there's a very big demand for affordable cars. This is the primary reason why Trump's tariffs just don't make sense. It insulates US automakers in a bubble that punishes US consumers and takes away the need to innovate ahead. Normally, the way to punish automakers is to see their stock price fall. Management would see their compensation get grounded into the dust. But in the US, things work out very differently. You now have people in the White House trying to shield companies like Tesla from reality.
To build the next generation technology. I think if you want to learn something on this show tonight, buy Tesla. It's unbelievable that this guy's stock is this cheap. It'll never be this cheap again. When people understand the things he's building, the robots he's building, the technology he's building, people are going to be dreaming of today.
I mean, this is crazy, right? Is Lutnick trying to give stock recommendations? You have the Commerce Secretary of the United States pumping Tesla's stock up. Despite the company's failures, apparently it's now a fantastic buy. Why is the US government promoting Tesla shares? What is going on with the concept of free markets here? And here's the funny part, even Tesla knows they have to fight with the best to survive. Deep down, they know competition is the best remedy to win back market share. Now, a week ago, they launched a free trial of their full self-driving service, the FSD, in China. And this is to challenge BYD's own God Eye system powered by DeepSeek. Now, this should be the way for all US automakers. You fight tooth and nail for market share, instead of hiding behind a wall of tariffs. And in many aspects, Tesla's FSD is a step ahead of many Chinese companies. It's actually more responsive than many existing tech in China. It's still trailing behind the God's Eye system from BYD, especially when it comes to driver assistance and costs. And the only way for Tesla to decisively win is to face the competition in China. That's the only way they can overcome BYD. And this is where Trump's auto tariff complicates things. Tesla has a gigafactory in Shanghai, China. Production here is exported to the US market, which means Tesla will also face the 25% tariff selling their own American EVs into the United States. And this puts them in a crazy dilemma. Do they relocate more production to the US or continue to stay in China? Well, it seems that Elon has made his choice in this issue.
As a function of the great policies of President Trump and his administration, and as an act of faith in America, Tesla is going to double vehicle output in the United States within the next 2 years.
Now, doubling production in the US is playing the game on easy mode. There's no Chinese competitor there, and Tesla can basically charge whatever they want. But will they get the demand? Now, compared to Ford or GM, Tesla is ahead of domestic competition. But this is bad news for US consumers. They will be funding Tesla profits through a higher price tag. Aluminum prices in the US markets have also been driven to record highs even before the tariffs hit. To build a Tesla Model S, you need almost half a ton of the metal, which now costs more. It's really basic math. If the price of aluminum rises by 25% thanks to the import tax, Tesla can choose to pass the whole cost down to the US consumer. They're already slashing prices in China, so someone out there has to subsidize Elon's bottom line. And according to Bank of America, it will be the customer. Ultimately, the US is a net importer of aluminum. Producers will not want to pay the tariff. They will try to pass on as much as they can to consumers. Now, I'm not saying that Tesla will go out of business. I believe it will easily beat Ford and GM, but it would be mainly a US centric company that will burden US consumers with higher prices. So they will be fighting two battles and have two bifurcated markets. To grab global market share, Elon will still have to fight against BYD, but that would mean reshoring more production to China because of the ecosystem there. To sell globally, you need to bring your cost basis down. There's no fighting this reality. We can see this already playing out in Europe. Tesla sales for the last 2 months fell from around 37,000 cars to just 19,000. That's a dramatic fall of over 40%. During the same period, Europe's total EV sales increased by 28%. So someone is obviously buying more electric vehicles. They just aren't buying Tesla cars. Elon himself is becoming a major risk factor for the company. Trying to mix politics and mocking Europe every day relentlessly is starting to backfire. Here's the trillion-dollar question. Can Tesla survive? In the short term, I have no doubt that they will conquer the US market, but competing globally is going to get tougher and tougher. But let me know what you think. Can Tesla eventually compete globally with BYD? And is Trump helping or hurting US automakers with his tariff war? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.